everybody, Brian Shannon here from AlphaTrends.net. Today's Friday, the 20th of April, 2018. Let's take a look at these numbers here. For the most part, markets finished higher. You'll notice one big red mark, and that is the semiconductors, which lost close to 5% this week, bringing them close to negative on the year. You'll see that the S&P 500 is down on the year. Keep in mind, though, that doesn't include dividends. So if you include dividends, it's actually a positive year-to-date return. But things are certainly still volatile. Let's take a look at the charts and make some sense of the action. This is a daily chart. I've got a 10, 20, 50, and 200-day moving average. Then this purple is the year-to-date volume-weighted average price, the anchored volume-weighted average price by Alpha Trends here on TC2000. This is a level that we had an eye on this week because we just seen the market run from 254 and a half ish up to close to 272, and then it encountered that volume weighted average price. And we always ask ourselves, where has the market come from? So having this big rally, and where does it have the potential to go before it's likely to encounter an opposite force, which will slow its momentum? In this case, in this rally, that means resistance. We had this prior support in this area. We've got the year-to-date volume-weighted average price right here, and I had also noted in the Wednesday video that it was almost exactly a 61.8% retracement. Now, I wasn't saying that it would pull back. I said, though, that it's definitely a place to be a little bit more cautious and take a closer look at the action on shorter-term time frames. So we did back off pretty aggressively from there the last couple days, and just simply knowing these levels will keep you from prevent you from chasing moves and making mistakes in a market. So let's take a look at just a clean chart year to date, and what I'm going to do is I'm going to build this chart for you. What this chart is, this is the same year to date, and this is 195 minutes per candle, and I've got a number of volume weighted average price levels. But what we're going to do, instead of show you this complicated looking chart, I'm going to show you how that was derived. So we can take the anchored volume weighted average price and take it and start one from the year to date high, from the beginning of the year, and then we can take one off of the low that we saw here. Incidentally, that low was 51 days ago. So when we look at the 50-day moving average, what we have to remember next week is that we're going to replace this data for 4 days. That'll have the 50-day moving average head higher, but if we stay below that level, the 50-day moving average will be turning back down. Not to throw too much stuff at you, but here we can see, from the low, the average participant is now losing money. How about from the high this year? Well, from the high this year, we can see that that volume weighted average price comes in and pretty much closed on it yesterday. How about from this peak? And we closed right on that today. From the recent gap down here, we're above that level, and from this low we're still above. So it's not dire yet, but I think if we break below and hold below 263, there could be bigger trouble coming for this market. We know that we've tested that 200-day moving average numerous times in here, and we've got still mixed messages. We've got earnings that are continuing to flow out, and that's going to impact the individual stocks on a stock by stock basis. But if we look back again to that chart with all the volume weighted average prices anchored from each key high and low, so from here, all of these different levels, you can see now that I was thinking that last week it would be likely for the market to kind of find some resistance there, maybe come down to this level and then build some energy for a break. Now what we want to see is that this 263-ish level holds. If we see a situation where it drops down like this, I certainly wouldn't want to short it there because we'd have to consider how far and how fast it had rallied. But then to rally up, test it again, and then break down, I think that's what could lead to further weakness in this market. If we're going to look at the SPY, we have to look at the XLF, and the XLF, of course, is the financials. The financials, if we take a look here, I don't know why my year-to-date volume-weighted average price isn't on there, but we're below it. We're also below the volume-weighted average price from all these peaks and from these lows. And even if we take these lows, you can see that we are, 27.5 is going to be an important level. What's more telling about the financials, I think, is how they've behaved since the event. The event is the earnings that came out a little more than a week ago, and we're holding above that. So that's good. It's more neutral than anything. So more neutral is what I meant to say, not good. We're below the year-to-date VWAP. We're below a declining 50-day moving average. This market remains vulnerable, and breaking below here could indicate further trouble. Let's take a look at the Nasdaq. The Nasdaq, it's starting to look like a shoulder, a head, and a shoulder. I'm not a huge fan of patterns like that, but it's worth noting when you see it. The year-to-date volume weighted average price we got above and then back down through, so this might be a case of failed move, fast move. Let's take a look at that same 195-minute chart with all of the important volume weighted average price levels year to date. And again, each one of these candles is 195 minutes. 195 minutes is because there are two equal candles per day, 390 minutes in a day. So if we want to see the daily with a little bit more clarity, two candles here for each one daily candle, we can see that again we gapped above all those volume weighted average price levels, but now we're back below them, and I think 160-ish is going to be an important level for the Nasdaq. We still haven't tested the 200-day moving average, so if we were to break down, some people would be tempted to short underneath this, saying, hey, it made a lower low after making a lower high, but it depends on how it gets down through there. Oftentimes we see that a market will break an important level like that, and if it's expended a lot of energy already, it's basically taking stops from under there from people who are really the last to sell basically. Then you get a bounce and perhaps lower. So it's still indecisive here, but it's troubling that we were above all those VWAPs and now we are back below them. So I think that 164-ish, as long as we're below 164, we have to be pretty cautious on the intermediate term trend, especially when you consider the action in the semiconductor stocks. Looking at the daily time frame, we're close to that 200-day moving average, and where have we come from? Well, in the last 4 sessions, we came from 106 down to 99. So we've dropped 7 points. I'm sure we took some stops out under here. To me, those are uneducated stops, because why would you sell after it's dropped 7 points? Instead, at this point, if you're going to wait to be that late, look for the rally to fail and then maybe sell it, under here. Or you should have had your stops raising up underneath this level. Anyways, back to the year-to-date VWAP, we're below that. That simply means the average price paid for the semiconductors this year is about 104, putting the average participant down about 6 points, or close to 6%. So bigger picture, weekly time frame, still in an uptrend, but this is sure looking like distribution, and this is a very important level down in towards that 96 area. So keep a close eye on that. Like I said, the weakness in the semiconductors is not good for the health of the overall the Nasdaq. We are below all of these key volume weighted average price levels. Let's just build that out here. From this February low, you can see we're back below that. From the peak, of course, we're below it. From this low, of course, we're below because the price is below there. So maybe next week we see a little bit of a rally that fails and then back down. Biotechs, I think, remain a waste of time. They are the weakest group really that I look at on a consistent basis. Now they're holding 100. They're holding horizontal support, which was prior resistance. So neutral at best here, but still, you go back down to the daily time frame, we're stuck below at 10, 20, 50, 100, 200-day moving average. We're below the year-to-date VWAP. There's no reason to be long these biotechs that I can see. What do I want to say? Energy stocks had a great last couple weeks. I would look for them to pull back, down towards 71, 71 and a half over the coming weeks, and then perhaps be able to continue to move back up. Apple's a tricky one here. It's back below the year-to-date volume weighted average price. It's right on the 200-day moving average. If we take a look at a little bit longer term time frame, the level that's really been important is the gap from February of 2017. We saw support in there numerous times, and I wouldn't be surprised that at all to see maybe a little bit of a bounce here at the 200-day moving average, and then a failure, which brings it back down towards 160. So if you're looking to buy this stock, I would say be careful. I would be hesitant in there. Let's take a look at gold. I was talking about, and I've been talking about if it can break beyond the resistance at 1375 to 1390ish, that it could likely go pretty quickly to 1625. But this week, once again, we saw that, and each one of these candles actually represents 2 weeks. But for this period, you can see we got up towards the high end of that range again, but failed. So it's not quite ready yet. Energy is still building. We've got a rising 200-day moving average. And back to Bitcoin now. Bitcoin, we were looking for last week the volume weighted average price off this low to hold as support. And the next place that it's likely to rally up to where it finds some resistance, I think, is about 87.50. So if you've recently purchased it, start thinking about where you want to lock in some gains on Bitcoin. And then back to the markets, I'll just show you a couple of stocks that we were involved in at Alpha Trends. Let me tell you a couple names we didn't purchase. We were looking to buy Cree. Cree's got a nice looking weekly chart, and we were looking to buy this one on strength. I'm not a buyer of weakness, but we had some VWAPs in here in this area, and we were looking for it to buy on strength above this level. It never got above it, so we didn't get involved and we didn't participate in downside. In a market like this, you want to be extra careful not to do what's known as a cheat buy. You might see a stock with a great name like Renewable Energy, REGI, trades 665,000 shares a day, great looking weekly chart, and then you start stalking it on the daily chart and saying, wow, what a nice little pullback. But if you buy pullbacks, you don't know if it's going to continue to pull back. So looking at a 30-minute time frame here, what we were looking for in this stock was to get back above this level. We've got a volume weighted average price off this peak that we wanted to see breached, as well as some resistance. So being on the sidelines avoided us from participating on the downside. We did get out of a position in FireEye. This was a nice trade for us. We bought it over in here, actually. I didn't mean to use that tool, but we bought it over in here a week and a half ago. We sold some on strength, and we were stopped today out of the balance right here. This is incidentally the volume weighted average price right off of the high that it made in 2015. FireEye is still a good looking weekly chart. You take that off there, you wouldn't have seen it, but here on the daily time frame, I would continue to keep an eye on this one for it to pull back. And not that we want to buy a pullback, as I always say. What we want to do instead is see that it pulls back, begins to turn sideways, and then then the 5-day moving average comes down, looks like this, and then we would buy it in this case right here with a stop underneath the most recent relevant higher low, which would be either this level or this level. These are the stocks, types of stocks I talk about every single day for subscribers at Alpha Trends. They're obviously not all winners, but we had a good winner in ACLS the last couple days. We got short right in here, and there are small losses that we take, of course. So keep an eye out for, or take a look, at alphatrends.net if you're not familiar with it. If you're seeing this video on YouTube or let's say LinkedIn or Facebook, most of my work I consistently put on Twitter. I'm not into posting on all of these social media sites, so Facebook users are going to miss a lot. LinkedIn is going to miss a lot. YouTube, you're going to miss a whole bunch. Thanks for listening. Have a good weekend.